Hello everybody, it's Yashar here, back again with another video, and in this video I'm going to quickly update you on recent changes in my stocks portfolio, and we'll then discuss why I'm going to deploy more cash in my investment accounts in the next couple of months to buy Canadian stocks. The dollar figure of my own portfolio at the moment is close to $82,000, almost $80,000 in Wealthsimple, and $2,000 in National Bank brokerage account. And our combined grant portfolio of me and my wife worth a little bit over $101,000 today. We have a lot to cover in this video, so let's jump right into this. I first just want to start with the overall portfolio allocation. This is a nice graphical representation of the stocks we hold in our combined portfolio of me and my wife. This is an overall a concentrated portfolio with 13 different stocks. The top 10 stocks in this portfolio are Aritzia, which is still our largest holding at 16% weighting. EQ Bank, our second largest position with 13% weighting. Meta, the third position with 13% weighting. Google is the next with 11%. Brookfield 11%. TD 11%. Granite REIT with 7% weighting. MasterCard with 7%. Amazon with 5%. And finally, Killam Apartment REIT with 3% weighting. These 10 stocks together form almost 95% of the value of our stocks portfolio at the moment, which shows how much I believe in these companies and how much we are concentrated in these positions. After these 10 large positions, we have 3 stocks with total weighting of almost 5%, which are Louis Vuitton, Alimentation Couche-Tard, and PayPal. Of course, the plan is to build a larger stake in these 3 stocks that we own, so we have a much more balanced portfolio at the end. In terms of the sector allocation, financials and tech are still our largest holdings, followed by consumer discretionary stocks. In terms of individual account performance, let's look at my personal RRSP account first, which performed very well this year and it is up 25% overall. This account consists of only US stocks. I basically had just one trade in the last month in this account. Here I have 25 shares of Amazon, which is up 26% so far, and 70 shares of Google, which is up 16% so far. I really don't want to add to Amazon or Google here, as I believe both companies are fairly valued at the moment. If Google drops below $105, I would be interested to add to my Google position again, but not here. I also have 14 shares of MasterCard, which I'm happy with my weighting in this company at the moment. MasterCard is an amazing business itself, and I think right now it is fairly valued. The new addition to this portfolio, the only trade I have is PayPal, which, as I mentioned, is the only buy I had during the last month. I believe PayPal is slightly undervalued here, and I like to add to this position if it drops below $60 again. Overall, I'm not going to buy any of these stocks at these levels and would prefer to just hold these stocks at the moment. Next, let's look at my personal TFSA account, which consists of Canadian stocks. I am down almost 4% in this account so far, which is not really good performance, but I believe Canadian stocks that I hold in this portfolio will outperform the market in the future, especially after we finally finish this recent credit cycle. I want to deploy more cash into this account and maximize my TFSA with Canadian stocks, as I believe Canadian market has a much better valuation compared to US market at the moment. Here I have 20 shares of Alimentation Couche-Tard, which is up almost 4%. I really like to add to this position, especially if they miss their earnings number and the share price declined to around $60. I definitely want to deploy cash and buy more shares of Alimentation Couche-Tard. Next, I have 290 shares of Aritzia, which was one of my main buys during the last month. I'm down 14% on this position, but I believe Aritzia can easily rebound to $40 range if they report good numbers next week. I think this stock is very oversold and undervalued here. This is not a regular retailer with declining revenue and tons of debt on the balance sheet. This company is still growing fast, even in a not great macroeconomic condition, and if they can solve the inventory issue they had in the last earnings, I believe Aritzia can rebound quickly to $40 range. If Aritzia share price decline again after these earnings, I will deploy even more cash to buy the dip. Next, I have 260 shares of Brookfield Corporation. I added 10 shares to my position during the last month, but I'm still down 15% on this stock. Brookfield is another stock that I believe is very undervalued and oversold. Their business is of course sensitive to interest rate in the short term, but for a long-term investor like myself, this is just a great opportunity to buy this quality business at a discount. Next, I have 200 shares of EQ Bank, which I'm totally happy with my weighting, and I'm up 15% at this position so far. My only plan with EQ Bank is to just hold the stock and enjoy the growing dividend of this company at the moment. Next is Granite REIT, which was my main buy during the last month. I bought almost 20 shares of Granite REIT recently, and now I own 100 shares of this REIT inside my TFSA. Granite is a real estate company with focus on industrial warehouses, and it has extremely strong fundamentals. Even in a high interest rate environment, which is awful for real estate companies, Granite is still growing its AFFO per share, adjusted funds from operation per share, while buying back the cheap shares of the company, paying down the variable rate debt, and reducing its dividend payout ratio quarter after quarter. I believe once we are done with the interest rate hikes, Granite can start to raise this dividend again. I'm extremely happy with Granite REIT management team, their decisions to deleverage the balance sheet during this time, and for that reason, I bought more shares of this undervalued Canadian REIT. Next is Killam Apartment REIT, another great well-run real estate company in Canada. I bought a few shares of Killam in the last month as well, and now I own 203 shares of this company. And I am down 6% on my position so far. I will consistently buy more shares of Killam for the rest of 2023. Finally, I have 137 shares of TD Bank, which is still slightly undervalued. If TD share price remains low, I will buy more shares of TD in the coming months to increase my position to 150 shares in this company. There you are, guys. I hope you enjoyed this short and quick update video. And if you enjoyed the video, consider subscribing to the channel to see similar portfolio update videos. I will come back with some stock analysis videos on a few Canadian stocks soon. But until that time, I see you guys in the next video. Farewell.